You can make $200,000 a year, drive a pristine car, live in a downtown luxury apartment, and still be completely trapped. Then there is someone making half as much money, but their expenses are low, they have zero bad debt, and they own enough investments to cover their daily life. That high earner looks wealthy, but their entire existence relies on a fragile premise. If their next paycheck suddenly disappeared, their lifestyle would collapse within weeks. They wake up every Monday morning knowing they have to keep working just to maintain the image they've built. The moderate earner might not look rich, but they possess something much rarer. Because their investments generate enough return to cover their basic needs, they don't actually have to work. Their time belongs entirely to them. True wealth is measured by the degree to which money no longer dictates your daily decisions. Reaching that point requires a very specific psychological trap: lifestyle inflation. When a promotion hits or a salary increases, the immediate instinct is to upgrade your life to prove you are successful. A better job suddenly demands a nicer car, a bigger apartment, and more expensive vacations. Look at these two scenarios side by side. If you earn $50,000 a year and spend $48,000, your margin of safety is incredibly thin. If your income doubles to $100,000, but you increase your spending to $98,000, you are in the exact same precarious position. Your salary doubled, but your freedom stayed exactly the same. Matching your expenses to your rising income feels like progress. In reality, you are simply becoming a much more expensive person to maintain. The most effective thing you can do when you get a raise is keep your lifestyle exactly where it is. By holding your expenses steady, you create a permanent gap between what you earn and what you spend. That gap is the actual raw material used to build financial independence. Getting out of the paycheck-to-paycheck cycle means moving away from a vague desire for wealth and replacing it with a concrete mathematical equation. You need to calculate your freedom number. This is the exact amount of invested assets required to pay for your life indefinitely. The standard way to calculate this is the 25 times rule. You simply take your annual living expenses and multiply that number by 25. If it costs $40,000 a year to live, multiplying by 25 means you need a $1 million portfolio. But if you optimize your spending to $30,000, that reduction drops your requirement to $750,000. You moved the finish line $250,000 closer without earning a single extra penny. The catch is that there is a floor to your expenses. You can move to a smaller apartment or cook at home, but you cannot cut your spending to zero. Once your lifestyle is reasonably optimized, the only way to accelerate the timeline is to aggressively increase your income. That means acquiring new skills, or switching companies, or building a business. When you combine a highly controlled lifestyle with a growing income, you create massive leverage. Every dollar you permanently remove from your yearly expenses drastically reduces the amount of capital required to buy your freedom. None of this math matters if your financial foundation is fragile. The entire equation collapses the moment it faces an external shock, like a job loss or a medical emergency, if you haven't built proper defenses. Here, we see how high-interest debt destroys progress. Investing while carrying a credit card balance at 20% interest is like trying to fill a bathtub while the drain is wide open. You keep pouring money in, but the debt drains your capital away. Once the expensive debt is gone, the next structural defense is an emergency cash fund. This is not an investment designed to earn a return. It is a buffer. If your car breaks down and you only have $200 in checking, you are forced to sell off your actual investments at the worst possible time just to survive. Cash on hand acts as protective armor. It insulates you from panic. When an unexpected bill arrives, you can pay it. When you are stuck in a toxic job, you can walk away. Cash preserves your ability to make logical, autonomous decisions instead of desperate ones. With high-interest debt eliminated and an emergency fund securing your foundation, you can execute the final step of the equation, deploying the gap between your income and your expenses into assets. Many people believe that investing requires watching financial news for hours, predicting market crashes, or finding the next explosive stock. Building wealth is rarely that exciting. For the vast majority of people, buying diversified, low-cost index funds is the most reliable way to capture long-term market growth. You just stay invested and keep contributing. In the beginning, it is incredibly boring. You put in $10,000 and nothing obvious happens.
This chart perfectly illustrates the reality of compounding. The growth remains completely flat for years. But eventually, you hit an inflection point. The returns you earn start generating their own returns, and the line suddenly curves upward. Your money begins aggressively doing the heavy lifting, completely independent of your labor. Reaching the target number relies on feeding a reliable system and giving it the decades required to compound. When that compounding system finally overtakes your living expenses, you reach the target endpoint. Imagine waking up on a random Tuesday morning and realizing you don't have to go to work, not because you're sick or taking vacation days, but because your assets cover everything you need. You can still go to the office. You might even want to keep working, but hitting your freedom number shifts your career from an obligation into a voluntary choice. When the daily financial risk is removed, entirely new options become available. You can build a passion business, travel for months at a time, or spend hours with your family. Financial independence provides total control over how every hour of the day is spent. Accumulating a massive salary while trapped in the cycle of lifestyle inflation is a well-decorated prison. The mathematically correct sequence is to control your lifestyle, build your defenses, and secure freedom first. Only then should you worry about getting rich.